All right, welcome back for the episode of Carnivore Trades. Today is Friday, October 6th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Oh, don't want to forget, like, comment, subscribe. There you go. All right, anyways, let's get into it today. So markets here, big squeeze mode with multiple U's and multiple E's, right? Squeeze. So Spider's up 1.5, Triple Q's up almost 2% on the day, and the Dow up 1.3, even the Russell, even the Turd 2000 getting a bid, up 1.4. Nice pop there for IWM. We'll talk about that in a second. So what happened here this morning? Well, we had the non-farm payroll. I told you that was going to be everything right today. And why is the market rallying if we had a hot number? Really hot number. I thought this might happen too. Hot number, and we're squeezing anyway. Why? Well, we had the JOLTS number earlier this week, and we had ADP, and we had jobless claims. All of them pointing to what? A hot NFP number. So markets gapping down. What have I been absolutely beating down into the ground the last couple of weeks? You got to gap down and flush to put in a low. If you're asking yourself, did Aaron buy this dip? Yes, Aaron did. And we're nicely in the money, about 4 points already on our SPXL position. So nice job there. What kind of gave it away outside of the kind of macro thesis there being priced in? Well, you take a look at the futures, and we never really took out that low, right? It got close. Typically, if you're going to have an impulsive move, you're going to take that low out very quickly. If we look at a 10-minute here, we got close and we bounced, and then we started to put in a higher low. So that was a giveaway, and then we rallied very sharply. Additionally, something you can always use here is those Bollinger Bands. And on the ES, it's opened up now, but at this time, 9 o'clock this morning, this was curled up, indicating that price is going to have a real hard time breaking through that. And it ended up being a pretty good buy the dip. So markets here, everybody wants to know, are the lows in? It's certainly getting a big pop, right? So markets are going to close at high of the day. I'm doing this video a little early because it's Friday, Columbus Day. Remember, bond market closed Monday. It's a bank holiday. So we're not going to see anything of significance by the end of the day. Maybe we just chop around. We might pull back a little bit. But the market's going to hold up, obviously. Nothing's going to happen. So there's no need to wait to do this video. We can get everything done right here. But are the lows in? It's certainly possible. I will say, I just want to caution everybody that this is kind of how you get a big leg down too. What I mean that, well, how can I say that when the market's up 1.5%? You get the bears off board. Nothing's changed with the macro, right? Rates are still out of control. Junk debt has gotten a nice bid over the last couple of days, but it's still in really rough shape. HYG as well. We see TLT there. VNQ trying to get a bid, trying to save that level. So we still have sectors that are broken here. XHB not in the greatest shape. XLF, KRE not in the greatest shape. Right, so there's still nothing's changed, right? So I just want to caution here. Ask yourself, on an intraday basis, did we build supports? Right, this is something I also hammer on all the time. And no, we obviously did not. But if you wanted to have a big drop, by the way, this head and shoulder pattern is not negated yet until you close above this neckline. But if you wanted to have a bigger drop, you got to get all the bears out, and you got to get everybody talking about new all-time highs, the bears over, FANG, Mag 7, all that good stuff. So that's how you do it. Again, we didn't build support. There's nothing to say, but we have CPI next week. I want to talk about that too. If that comes in cold, you might think that's a good sign. But right now, what the yield curves are telling us is that it's probably getting close to recession here. When this uninverts, that's usually the kind of the case. So that's something to think about. Additionally, one other thing to think about is the yield curve is uninverting from the long end. It's very, very important. I know everybody just locks into the 10-year yield and that's all they look at. You got to look at all of them. The yield curve's uninverting for the long end. What does that tell us? It tells us the market expects inflation, right? So we could come into a recession where it's stagflationary, which means the Fed can't do anything. They're handcuffed, right? That's kind of the whole reason why the market would be worried. But right now, you're getting a bid. I think it's priced in, at least NFP was. These are just food for thoughts, little droplets to take into consideration. Again, we didn't build support. You can wipe this back out as long as this holds. Just keep that in mind. If this is the low, well, then first you got to get through this, obviously. You got to close above that. You can negate the pattern. And then near term, you look at, 442. And 445, there's that pivot there, so that breakdown. In fact, I don't even care about this anymore. What I would rather look at here in the short term, outside the gap, which is obvious, is this pivot high. So 444, 44, right there on the SPY. And we'll take a look. Again, we talked about this earlier this week. Did they get left at the altar? Looks like it. So I really would have liked, my preferred scenario would have been a move down and then a rollover, like a hard flush today. And then maybe even into next week where you just kind of do one of these and then you get up there. A lot of the time that's what'll happen. They'll pierce it through that 200 moving average, get everybody's stops out. This time they basically just left some bulls at the altar who are waiting for that 200 MA pierce. But either way, big rally there for the market, and not much else needed to say. Triple Qs here, take a look at the trend line. Kind of stalling out with that 20, 100 and trend line. We did fill the gap, it looks like there. Next level would be the 50 if you get through that. It might need to pull back a little bit here. You had a big run today. You're into a good nexus of trend lines and moving averages, also the gap. So it may need to stall out here. But if you get through that, that's where you're going. So that lower trend line right there on the triple Qs. And we'll extend that so you can see it there. And then if you get through that, it's up to 380. So pretty simple there. IWM, getting a nice bid. Again, back testing that trend line. We'll see if they close it above that. I mean, that's not, you still need to really confirm a break through it. And I think really the bigger level right now is 174.29 because that was your breakdown pivot. So you get a close above that. Then the Russell can really start to push up. We'll look at 178.50. And then once through this, there's a little gap there, but really 182. On the IWM. This, again, another thing where I got a caution here is if this fails and this rolls over, this can still go to 165. The Russell can be a leading indicator, right? The Russell was the first to have the head and shoulder break. Don't just assume the market's out of the woods because they had a big squeeze day. If you're going to fake out the bulls and fake out the bears, you've got to make it look good, right? So, again, just keep that in the back of your mind here. But anyways, Dow here. Outside move up. This should continue higher. I like that kind of failed bear flag look. It wasn't quite a bear flag yet, but I told you guys about this weekly support level. It should have held, and it did. Near term, 338 on the daily, 200 MA back test, 338, 339, and then 343 is your big levels on the diamond. Semiconductors, nice little zigzag up, so that's actually in much better shape now. Still a lot of resistance around 150. So we'll look for that in the near term, but it is holding, back above that trend line. I'm not sure I really like that trend line even all that much anymore, but we'll leave it on there for now. But again, 150 is your near-term level there on the SMH. IGV also getting a big outside bid, filled the gap. 352 to 353 is your next level. Might need to pause a little bit. It's a big move there. Dow Transport's also bidding up. Still has not broken trend though. It is saving that 200 moving average. You talked about that. Needed to close above that on the weekly, and to be fair, it's doing that. It's getting defended, but you kind of have like a, you're still, even not even using that, like using this, like you're still below this. Like it's still trending down. It's a nice pop, but you got to get at least above this short-term little trend line here, and then above this, and then I think you can get up to 15.5. But near term. 15,000 and then 15,250 will be your levels, but it is holding up now. And again, weekly, I like to you test the 50 week and 100 week moving average, and you got a tail candle, so that can get a bid here in the near term, and it's doing what it needs to hold up. Interest rates here, 2-year, getting a bid today, so up 1.19. But it's not breaking out, and we did close below that green bar yesterday with that close. So 2-year may need to pull back a little bit more. Again, we didn't make a new high, so keep that on your radar. If this does start to break out, again, remember, trend is up, so it can still go higher. Give it the upside bias. But if we take out 5.33, market's going to have problems. That's really all it comes down to. And again, this is why I say, like, don't get too excited about the lows being in. There's nothing has changed macro-wise. We're getting a rally because the market kind of priced this in. So just be careful. 5-year, no new high, so that may need to pull back. 10-year, micro double top. This trend is still up, looks okay. 30-year made a new high, but this came way off the highs. I think this is really stretched, needs to pull back. Again, might give the market a little bit of a bid if that happens. Into XHB, so this one has still been on the weaker side. It does look like we're going to close. They'll probably close this above 75.32. It's literally exactly right there right now. And if that happens, then I like it up to, we'll say 78 for now, okay? So that's what we're going to look for XHB. Little tail candle there. Again, he kind of kissed this pivot. I told you guys 72, didn't quite get there, got to 73.24 and then bounced. Never got to the 200, kind of like the spiders. If this does start to roll over, there's still a lot of support at 70, but that's where it would go next. VNQ, again, watch this level here on a weekly close, so 74.66. We're below that. I would not, for the market, I would prefer this to be above there by the end of the week, because it's kind of like a weekly breakdown if it's not, but you do have a nice tail candle there. So it might get a little bit of a bid in the short term, and you have the 200-month moving average, but this is just not a strong pattern really any way you look at it, so just be careful. XLF getting a nice bid. Again, we still confirmed that trend line break last week, and it's holding the 200 moving average on the weekly, but I would expect this trend line here to be resistance when back tested, and I still don't like the look that I'm getting from the banks here. KRE, yes, it defended 40, but I say it is not a power pattern at all. Same thing with KBE and KBWB. I don't like those patterns. They're getting defended here in the short term, so we'll respect it, but that's all it's getting is micro defense. Broker dealers getting a pop, so close to 485. We'll say that can go to 490. Crude here trying to hang on to that 82 area. I actually think crude's okay here. If it breaks down, it's probably not going past 77 to 78 anyway. A little oversold. We'll look at 88 in the near term, and it's getting a short-term bounce. But again, went up into that weekly level and sold off pretty sharply. XLE, what did I tell you guys? 85. Nice bid there. What did I tell you guys about XOP? 135. What was the low yesterday? 134.99, and it's getting a nice bid. OIH, what did I tell you guys? 20-week moving average, and it's getting a bid off of that for now. Doesn't mean it has to continue, but that's where it's got to pop. If it goes down, it's probably testing 300. CCJ acting well. I like what it did on the weekly. It's closing back above this green bar. As long as it stays above that on a weekly close, it's safe. If not, and we get a close below that, I think it's done for the foreseeable future. URNM, again, just a lot of weekly resistance up here. It needs to do some backing and filling. All right. Now on to the big star. So nat gas up another 6%. This is why I said, you got to get above 3, and when it gets above 3, it squeezes. Again, so it's really that simple. It's just the way it works. You hit it here. It took you 6 months to hit it again, and then it took you 6 weeks to hit it again. The shorts are getting squeezed. It's really that simple. This is going to 4, and then ultimately 5, and then 6. Is it going to go there by next month? No, but it will, I think go there a lot faster than you think. And if you don't think that, just look at 2021. It went from 3 to 6 in about 4 months. So this can do that. This is what natural gas does. And I've been talking about this for a long time. This is a coiled base, and that is a spring. So big move. It should pull back a little bit next week. It is, looking at the Bollinger Bands, it's like completely outside of its daily Bollinger Band here. But that's what happens when you're on breakout. And that's what nat gas does. All right. Dollar index here pulling back 106.05. Got to stay above 106.04 on a daily close. Otherwise, that green bar will be negated. Doesn't mean it's a broken pattern, but it probably takes you down to 105, 104.50. in the near term. Again, this weekly resistance level on the DXY held. 12th week, finally red. So that may give the markets a lift. I also think that will pull back yields, hence why I said yields are getting a little stretched here. But DXY coming in. All right, gold. What's the level I gave you guys for 6 months? 1825. It's the low of the day. 1823.90 or 1823.50. Sorry, getting a bid here up 75 basis points. 1900 is your short-term target. But gold getting a bid there. I don't like the weekly. I don't like how we close below that green bar, but the monthly is still intact. And we'll give it the upside bias as long as that is the case. And again, it's a good level there. Another good level, silver, 21. There's your bid. Short-term, 22.50. That looks to be acting well. Platinum did get down to 860. I would have preferred a little bit more of a flush on it. Didn't quite get there, but it is getting defended. Palladium still has to go a little bit lower. And then copper holding double bottom, but again, you close below that wedge pattern. That looks like a breakdown on the weekly. So I think copper does need to go test 240. Lastly, Bitcoin, no updates here. Just a nice inside bar pattern on the daily. Still giving that the upside bias to 30,000. If we close below 27 on a daily close, that pattern's negated and the weekly kind of takes over. So weekly bearish inside bar. But the monthly is still holding up with a bullish inside bar. So lots of convergences there for Bitcoin, but it is hanging in there. And we'll give it the upside bias to 30,000 until proven otherwise. All right, lastly, let's take a look at the spiders here again. So we're just coming just ever so slightly off the highs. Again, it's not going to amount to anything here. But again, short term, we'll look at 430, 431.85, 432, and then 20 moving average and this head and shoulder neckline. That's going to be key next week. Right here on the SPX, if you follow that, 43, we'll call it 43.35, 31. That was that pivot low from August. Close above that, probably gets you up into that gap fill area around 4,400. You also have the 100 and 50-day moving average in that range. So that could be your short-term targets. But nice pop here for the markets, nice little squeeze. And we'll see what we get next week. Don't forget there is CPI coming out, so that may move the market as well. Anyways, guys, gonna wrap it up here. You guys take care. Have a great weekend. I will talk to you guys all later. Come find me at carnivoretrades.com. I'll see you guys later.